In this video, we are going to discuss the components of working capital and the one of the major component, that is cash. So, what is cash? So, according to I.M. Pandey, management of cash involves three things. First, managing cash flow, that is into the business and out of the firm's cash inflow and outflow. Second, managing cash flow within the firm, within the internal departments. Third is financing deficit or investing surplus cash and thus controlling cash balance at the point of time. According to R.M. Srivastava, the primary goal of cash management in a firm is to trade off between liquidity and profitability in order to maximize long-term profit. So we'll be discussing what are the objectives of or motives of holding cash, and what are the factors determining cash requirement. So with respect to motives of holding cash, again there are three major motives. One is the transaction motive. Obviously, we need to have day-to-day transaction, or for these day-to-day business transaction we need cash. Second is speculative. To get the advantage of increase or decrease in price, we need to have some amount of cash. Then the third is precautionary motive. For some unforeseen, special, or not estimated, not planned requirement, we need some amount of cash. If there are such kind of events, we need some cash. So cash is the business are holding cash for transaction motive, for speculative motive, and for precautionary motive. You can see these 3 points are bifurcated into 8 points. You can see on left hand side. Now we are going towards the right hand side. What are the factors determining cash requirement? So what is the amount of economic transaction? If the amount of economic transaction is high, then we need to have more cash. Second, incidental requirement. So incidental requirements are obviously incidental, so we cannot estimate them, but we need to keep some cash into the margin, or we should obtain bank overdraft facility for some incidental or precautionary requirements. Third, we can uh, obtain more advantage if we are having cash of the market condition. We can buy in bulk. The bargaining power of our company will increase if we are having more amount of cash. Then advances to be received in short time, that is, we can say we can get the amount from the bank for very short period of time, or we can have the facility of bank overdraft. This will affect the cash requirement. Then the rate of interest which is prevailing into the capital market. Then the compulsory cash balance that we need to maintain as the business account, we need to maintain into our bank balance. Then the size of business unit, if it is large, if it is small, then it will be determining our cash requirement. The period of process, the period of cash conversion cycle, when cash is again converting into itself into the cash. Then which type of product we are having, whether we are in the production part, or we are in the trading part, or we are having some services, that will affect. Then the purchase and sales policy of the company. Then what are the future development schemes and the trade cycle. So these are the key factors which are affecting our cash requirement.